value go down and this value start going up, right? So this is how you retire the long-term debt, right? We'll talk about in our coming lectures how we are going to do that. But right now, just to understand the balance sheet. Okay. And now stockholders' equity. It represents the stockholders' ownership of the business. Assets, right? How much they owe in company's assets. That's it. So they include common stock, additional paid-in capital, retained earnings, treasury stocks, and other comprehensive income. Let's talk about these one by one. Common stock. So these represents the share issued to stockholders, and they are at par. At par means the original value. We know that right now, for example, the original value of the stock is $10, but it's selling in the market for $30, right? So $10 is common stock and for $20 is additional paid-in capital. This is the value that has increased, right? Additional paid-in capital. Amount of cash received on initial sale of company stock in excess of par value, right? It's just the way you see that how the company's original stock is selling in the market. So this is the stock issued at original value, and this is you get in excess or excess value. That's it, right? Retained earnings, we already talked about that, belongs to stockholder equity. And what is treasury stock? A very fancy name. Treasury stock means that you buy back your own shares. And remember, that is not investment, right? In assets, we talk about short-term investments, and those stocks are other companies' assets. Now, this treasury means that you are buying back your own shares from the stock exchange. So what are the reasons? There can be many reasons. You don't want to, you think that you issue too much shares, so you are buying back company shares, or you don't want to be, you think that going to the public company is bad. We were a family business, so we are not including anyone else or public to share our business, so you are just buying back shares. Or in order to control the company, because in order to control company, you must be having 51% shares, right? And you see that, somebody is, buying out shares to like a hostile takeover something, so you are buying back your shares. There are different reasons for that one. But treasury stock means portion of net income reinvested into the business, that is retained earning, amount paid by the companies to repurchase its own stocks. And what do we mean by other comprehensive income? So like you have a business in US and for example in China. So when you earned 1 million yuan profit, and now you are sending those yuan into dollars in US. Luckily, yuan appreciate, and what happened? You intended to receive, for example, $100,000, but due to this forex, foreign exchange, you received $10,000 extra. So that $10,000 is not your effort. You didn't do business strategy or something. That is by chance or due to the market forces of foreign exchange currency, depreciation or appreciation. You receive some extra money. So that is called the the other comprehensive income. If there is a loss, then we call this other comprehensive loss. So why we write it down separately? Because so that is not in control of managers. Managers are appointed to see the operations of the company. They are not appointed to see also the forex market, because forex market, they have their own mechanism. A manager will say that, look, we made you earn $1 million profit. That's it. That is our job. But when we send those $1 billion to US, due to this market fluctuation, the currency exchange rate between yuan and dollar disrupted, and you receive less money. So that is none of our fault. Or if you receive higher money, that is also none of our efficiency, right? Plus, that is not a business operation to earn from foreign exchange market. So that is why we call this other comprehensive income, and that extra 10,000 belongs to shareholder, not the manager, right? So that's why we call that comprehensive stuff. So there are many other things as well, that like GAAP or FASB. These are the accounting standards board, those who make the accounting rules. When they change the rules, and then if that change going to benefit you, so that benefit also belongs to shareholders, and that is reported in other comprehensive income. Understand? And that is a balance sheet item. It's not income statement item. Remember this one. So don't be confused with this word comprehensive income. Comprehensive income, or you say that no, this is a part of income statement. No, this is a part of balance sheet under stockholders equity. Any question?
No.
Okay, let's move forward. So up till now, we have discussed extensively about the items, each item, retained earnings of every part. So you are not required to learn by heart everything, but you are just required to logically understand the concept. That's it. Because when the time passes, when we do some examples, you automatically retrieve all these. So don't you worry about that. Okay, so this is the equity position on, or owner's equity on balance sheet of Gap Incorporation. So we have total liabilities. That is the previous part here. Stockholder equity. We have common stock, see 55. Additional paid in capital, we see here. Retained earnings, it increased. Why increased? Because we have profit in 2012, and that profit is included in retained earning, right? And where this retained earning, this amount came from? It's from retained earnings statement of Gap Incorporation. In previous slide, we talked about this. And this is comprehensive income. Maybe they have different businesses in all over the world. When they convert that one, or maybe due to some other stuff, they find that income. So that income belongs to balance sheet, and also belongs to common stock equity, shareholder equity. So this is the total equity. Total equity plus liabilities is equal to assets. So 7422 is the total amount. So equation is balanced. Assets is equal to liabilities plus owner's equity. So when you add them, let me change the color so that you understand. Here we go. So liabilities plus total owner's equity. Answer would be this one. So look at our assets. So let me just go back and see our assets. Asset side. See, it's 7422. So equation is balanced, or statement is balanced. So we discussed each and every part or every statement. The thing is, they are just a formulas or equations, but we have written in statement form. That's it. And now, statement of cash flows. So statement of cash flows, it measures cash receipts, which is inflows, and cash payments, which are outflows. So cash flow statement, it reports three types of activities. Number one is operating activity. Number two, investing. Number three, financing. So here, operating activity, it shows the cash flows. So only cash transactions, right? So the whole statement will only report cash transactions. So non-cash transactions are not reported in any activity here, whether it is operating, investing, or financing. The operating activity shows the cash flow from selling goods and providing services to the customers. That's it, right? How much payment is coming? How much payment is coming from customers and payment going to the suppliers? The net effect. Operating. Investing, purchasing and sale of long-term assets. You purchased